Hello, Arun here. Now, one of the things that, as an accountant I see a full array of bookkeeping, and I see some people do it so well and some people can make a complete hash and mess of it. And if I had to be very candid and very open, I'd say that most people make a hash of it if they don't have a bookkeeper involved or an accountant involved in doing it. And trying to do bookkeeping yourself, whilst it's not the most difficult thing to do in the world, people still make a mess of it. So it's so important to do it right if you're running a small to medium-sized business. So what I've done today is put together 7 tips for your small business to bookkeeping right. Okay, so these are my quick 7 tips for today. Firstly, organise your financial records from the start. Get organised. So that means if you're getting invoices in and other records in, make sure you've got put them filed away or scanned into folders so you know where they are and they're very accessible. Okay. Get that right, get everything organised. So expenses, invoices, receipts, credit card receipts, you name it, get it all together and put it in one organised place. Secondly, and this is very common, is people mix up their personal business expenditure. Keep the business separate to the personal expenditure. Don't use the same credit card for everything. Do not do that. It's just going to make your life a headache and it'll make any bookkeeper or an accountant's life a headache. So keep them separate. Have a separate credit card for work and have a separate business and a separate credit card for your personal finances, and never shall the two meet. Okay? And that goes similarly for bank accounts. Have a separate bank account for your business and a separate bank account for your personal expenditure. Again, good practice, good organisation is the foundation of bookkeeping well. Then you have the next step is to effectively, if you're bookkeeping, you want to be using software such as Xero, QuickBooks Online, these types of things, and making sure that all those transactions in the bank account that you see are reconciled with payments, reconciled with income coming in. And this can all be done with the software very swiftly, very promptly, and with the technology that's available today, it can be done in a timely manner as well. Now, if you don't want to do that, again, your bookkeeper and accountant can do this very quickly and efficiently for you. When you're doing the bookkeeping though, it's all well and good putting the numbers into the system, but if you're not actually reading or reviewing or tracking expenses, tracking how things are going, it's kind of, you're losing out a lot. Okay, so it's so important to think, okay, how are my expenses this month? What can I trim back or what can I change? So really kind of get into the numbers. And this is because ultimately, as an accountant, I say this, but the numbers ultimately tell the story. So understand the figures, understand all these aspects really much so. So then you can start making better decisions. In addition, the 5th point really is then if you're going to go down this route of bookkeeping, which I strongly encourage that you do, you embrace the technology that's out there for invoicing. So with Xero, with QuickBooks, you can invoice straight away. Payments can be made very quickly through various platforms like Stripe and PayPal, and it all looks very sophisticated. If you need to do repeating invoices, or invoices can be repeated on a month-to-month basis, week-to-week basis. So use technology, because that can then also help your collections and ultimately help the money coming into your bank account. Not just for you paying out, but also for money coming in. So being efficient and organised will help get more cash in. And whilst you're doing the bookkeeping, every month, every day, every week, you can then also be kind of getting a good clear idea of what are my expenses for tax going to be like. Because if you know how much profit you're making, you're going to get a rough idea of how much tax you're going to be paying at the end of the year. And that's not just tax for the annual tax, but also your VAT bills on a quarterly basis if you're doing quarterly, any PAYE payments that need to be made for HMRC, for employer and employers' liabilities and national insurance liabilities. So it's so important that you were aware of your taxes as well. And then finally, can't stress enough, and I kind of hinted at it earlier, but you're doing all this effort, recording your transactions, it's then reviewing the reports that are coming out each month. You can prepare a set of accounts on a month-to-month basis and make decisions based on the information presented to you. If you don't put your head in the sand, you actually look at the numbers, you actually look at the figures and say, okay, this has gone well, this hasn't gone so well, what decision am I going to make from it? Because ultimately, the data tells the story, and that's the key thing. The data tells the story, and from that data, you can start making better decisions and ultimately running a better business. Hope that helps. Thank you.